Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a look at the recent run-up in the silver price and ASX-related stocks to watch. Silver has topped $45 an ounce for the first time in 14 years and is up around 55% so far this year, outpacing gold's gain of just over 40%. Silver prices have been on a tear amid a mounting investor shift towards defensive safe haven positions. A looming US government shutdown has put further upside momentum on gold prices, which have hit a fresh record, in turn boosting the price and demand for silver.
Huge spike back then, and then silver obviously entered a cyclical bear market, but it's very much recovered now and looks like it might have a little bit more momentum in it at this point.
The velocity of it is just extraordinary, and everyone's realizing it's a raging bull market. So I think it's got further potential. Certainly, I think 26 is going to be a showtime year for it, and keep an eye very much on silver. It's up 60% or 62% since the April lows.
Australia is one of the largest silver producers in the world, with silver production also a byproduct of mining other metals such as gold, copper, lead and zinc. Andean silver has outperformed the pace of the metal price, up almost 70% over the past year, and shares appear to be in a strong bullish trend, with the 5-day moving average above the stock's 20 and 50-day averages, showing investors are interested in holding the stock longer term. Meanwhile, legacy mineral holdings hasn't performed as well, up just 15% over the last 12 months, yet technical data show shares also in a strong bullish trend, as confirmed by multiple indicators. And it's a stock that Barry Dawes from Martin Place Securities says is his top silver pick.
I just think that Drake project has real potential. This is a very, very interesting technology that sort of picks up conductivity and gravity at depth, and Legacy has got something really quite special there at Drake. Now, Drake's one of those places that's probably got 100 holes with 100-gram meters on that the Southern Cross Gold has done extremely well from, and they've done extremely well, obviously. But
Yep.
The people that are there who have drilled previously at Drake have got some very high grades, and I think we're going to find something very, very interesting with a pretty high silver resource that's in place.
Well, Polymetals Resources develops and produces silver, zinc and lead, and shares are up an impressive 300% over the past 12 months. Ord Minnett retains a speculative buy on the stock, but has lowered its price target by 5% to $1.30, citing production ramp up, first free cash flow and potential re-rating in full year 26. Joel Fleming from Yarra Capital Management similarly excited about the outlook for Polymetals.
Excites us is it's very difficult to find exposure to producing silver assets on the ASX, and the silver price is not too far behind gold in terms of its catch-up there. And we think that there's some really interesting near-term cash flows and opportunities that will flow from the fact that they've got this high-grade component that they're pretty close to accessing. Yes, they're in ramp-up mode. It is a more riskier time for any kind of project, but the team have executed really well to date, and we just see some really significant cash flows.
Meanwhile, Chris Judd from Turity Macro Fund has his eye on some smaller players that he thinks can ride on the coattails of the momentum in gold.
Silver's all-time highs is $50 an ounce in US dollar terms. It's still more than 10% below that, whereas you look at gold and it's blasted through its previous all-time high considerably. So it feels like there's a little bit of a silver catch-up. Silver's a really hard commodity to trade in listed ASX stocks. There are some small stocks that companies can have a look at, Sun Silver, ASL, Rapid Critical Minerals, but they're very small and people need to really be aware. But it does feel that silver is sort of ready to gap up and is another sort of second derivative way to play this gold price, which has just been electric.
The expected continued rise of silver is likely to continue adding upside to material stocks.
Silver prices, in our opinion, are heading to north of 60 odd dollars, and usually they'll overextend through that average on these moves. So I think there's probably at least about another $15 to go in the physical, which will be a lot of these silver miners have got all-in sustaining costs around the $20 mark. So margins are rapidly expanding, and you'll expect to see a lot of those names head higher, considerably higher on the back of that silver.
Mark Gardner from MPC Markets also views the flow-on effect as positive for the overall sector, including market heavyweights like BHP.
Interestingly, Newmont and BHP are in the top 5 silver producers in the world as well. So there's a lot of tailwinds at the moment from not only copper, but potentially uranium, silver, and whilst iron ore is 50% of BHP's profits, if we see significant jumps in silver, we see significant jumps in copper and uranium prices, I think you'll start to see BHP really pick up, because that 50% may be reduced because they're getting much higher margins in those fringe commodities, which have been at pretty horrible lows.
And that is your IG Macro Intelligence for this week. We'll see you next week.